Well, UCO Bank, that's the stock on our radar. The company posted its highest quarterly profit in 7 years, and the asset quality has also improved, but the slippages continue to remain elevated at around 580 crores odd. Soma Sankara Prasad, the MD and CEO of UCO Bank, joins us on the show. Hi, sir. Good morning. Thanks so much for joining, and congratulations on a good showing. But, if we could address the slippages part first, it remains at around that 80 crores odd. Could you tell us what is the trajectory from here on a quarterly run rate?
Yeah. See, if you look at the slippages, last year the slippages were around 1,500 crores per quarter. Our total slippage for the entire year last year was at 6,000 crores. And now, as far as the slippages are concerned, they have come down to around 500 crores. Both in the June quarter as well as in the September quarter, the slippages are around 500 crores. And one more point I would like to bring to your notice, the slippages for this quarter are 556 crores, but the upgrade plus cash recovery is around 940 crores. That means our upgradation plus cash recovery is more than the slippages. So the slippages have considerably come down compared to the last year.
Okay, the slippages have considerably come down. So this quarterly run rate of 500 crores, right, in the June and September quarter, is that something that you can sustain in the second half, or do you think it can come down further?
See, we are actually looking at sustaining this rate in the coming quarters. That will be good for the bank. See, one major thing that has happened is that we don't have any major corporate account which is under stress. So, and the bank is adequately provisioned. We have a provision coverage ratio of almost 93%, which is, I think, perhaps the second highest in the banking industry. So, except for some concern in some of the retail accounts and agriculture accounts, we do not foresee any major slippage on the corporate side. So, I think we should be able to sustain this run rate of 500 crores. And I think if we are able to do it, I think it will be good for the bank.
Mr. Prasad, are you how is the corporate growth, or are you kind of being cautious there in terms of not growing that too much? You want more granularity because of what has happened in the past so many years, and how is that going to impact overall loan growth going ahead?
Yeah. See, if you look at it, we have had a difficult time in the last few years, and that was because of the major corporate slippages. So ever since then, the bank has been concentrating more on the RAM sector. So the ratio right now is the RAM is about 60% and the corporate is 40%. Having said that, I should tell you that we have seen very good growth in corporate advances in this quarter, because we find very good proposals on the corporate side, which are coming in mainly in the areas of NBFC, infrastructure, cement, steel, banks, and so on. So we have seen a corporate growth of 22% this quarter, but we are only going for higher rated corporates, A and above, so that we don't have the issues that we have had previously. Similarly, on the retail side, also we find that there is a strong demand for credit. So we have almost grown by 17% on the advances side. So now the major issue is that I think it is the issue for the entire banking sector that we have grown at 10.2% on the deposit side. So the liquidity has become a little tight. So that is going to be one of the major challenges going forward.
Okay, keeping all of that in the backdrop, sir, what kind of loan growth are you looking at for this year? And also your NIMs, they're coming at around 2.8% odd. Do you believe there's a downside risk out there? What kind of guidance could you give on that front?
If you look at the NIMs, our NIM this quarter is at 2.84.
Yes.
And if you look at the March NIM, it was around 2.74. So there is sequentially, there has been a 10 basis point improvement in the NIM. And we also look forward to further improvement in the NIM for the simple reason, as you are aware, we are in a raising interest rate scenario. So as and when the repo rate goes up, it has already gone up by 190 basis points in the last few months. All those loans which are linked to repo rate, the interest rate will automatically go up. So what happens is that it is good for the banks in a raising interest rate scenario, that the NIM will definitely go up. So that is a positive for the banks. So going forward on the NIM side, I expect maybe another 5-6 basis points, the NIM should go up.
Okay, this is actually a very positive commentary, and I think this is the most optimistic I've heard, your management in a while. You're saying that the slippages will sustain at these levels. There's no major corporate account under stress right now and no major slippage on the corporate side, which is great to hear. On loan growth, what is the current trajectory and what's the expectation for the full year?
We see, I think the banking industry is also growing around 15 to 18% as far as the loans are concerned. So we are also looking forward. See, half year the growth has been around 17%, 16.8 or 16.9. So going forward, we are looking at maintaining this trajectory, and we expect to grow. Somewhere around 17%.
All right, Mr. Prasad, we'll leave it there. Thank you very much for your time. Appreciate it very much, as always, here on CNBC-TV18. And hopefully things will turn around meaningfully for UCO Bank quarter after quarter over the next many. So that's the management of UCO Bank. Used to be one of the most stressed, but things are, there's a rising tide for PSU banks right now. And a lot of things are being fixed. 14.6, still one of the cheapest in amongst PSU banks, which generally, compared to the private banking space, are a far cry in terms of valuations. Mitesh is back with us. So there's about 6 minutes to go for market opening.